Qualcomm is scheduled to report quarterly financial results on Wednesday, February 5th, 2025, and investors are asking if they should buy this stock before it reports quarterly financial results. I'll answer that question in this video. I'll also preview what investors should look for from Qualcomm in the upcoming earnings release, beyond the obvious headlines of revenue and earnings per share. It's a lot to cover in this short video, so let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, Qualcomm last updated investors on November 6, 2024, where the management team and CEO said that they're excited about the recent product announcements at their Snapdragon Summit, and they continue to extend their technology leadership and position themselves well across handsets, personal computers, automotive, and industrial IoT. And the latest segments, the personal computer, is one that's exciting a lot of investors. There's a real opportunity open given how much Intel is struggling for Qualcomm to gain market share in the personal computing industry. And they've delivered a product that is compelling, and manufacturers are adopting Qualcomm's technology. Also, the company's recent developments in handsets are working well for the business also. That's great news for investors. Qualcomm has not been a fast-growing company in recent years, and the latest developments, the latest innovations are driving growth for the business. In its latest quarter, they delivered revenue growth of 19% and earnings per share growth of 96%. If you look at it on a non-GAAP basis, which is more comparable and removes one-off items, revenue increased 18% and earnings per share increased by 33% in the latest quarter. For the full year in 2024, revenue increased by 9% and earnings per share by 40%. Again, on a non-GAAP basis, revenue increased by 9% and earnings per share increased by 21%. These are excellent numbers. If Qualcomm delivers 9% revenue growth and 21% earnings per share growth every year to investors, that would be a great result. Investors would be thrilled with the company if it can do that year after year. And in fact, 2025 might be better than 2024, given the company's recent product announcements. Now, I recently did a Qualcomm discounted cash flow valuation model, which valued the company at $200 intrinsic value per share. The current market price is $170 per share. I talked about the different segments Qualcomm operates. It's long been a dominant player in the handset industry, smartphone industry, and in the latest quarter, that segment grew by 12% year over year, and that was a big increase in market share for Qualcomm. Another trend that's helping Qualcomm is handsets, smartphones. While the industry overall is not growing, it's in the low single-digit growth overall. It's a saturated industry. Pretty much everyone in the world that wants a smartphone has one. There's pockets of growth available, but overall it's a saturated industry. But what is happening within the smartphone industry is an upgrade cycle, a premiumization cycle, where people are going for the smartphones with more capability, with more premium features. And so whereas in 2023, they may have spent on average $300 for a smartphone, in 2024, they spent on average $350. Now, these are just estimates I'm providing, but from what I've read from all of the companies operating in the smartphone industry, that's the big trend that's overtaking the industry. That's the growth opportunity overtaking the industry right now, is that premiumization, the upgrades people are willing to spend money on their smartphones. And with the upcoming AI features, the forecasts are for that trend to continue. Furthermore, Qualcomm is making great inroads in the automotive industry. Cars are becoming more compute heavy. They're becoming more intensive in terms of the technology that they offer consumers, and Qualcomm is participating. $900 million in revenue in the latest quarter in this segment. That was up 68%. For the full year, that segment grew by 55% to $2.9 billion. And given this trend towards driverless car technology, which is going to require more and more computing power on board, that's also great news for Qualcomm. And Qualcomm talked about this in their investor conference quite extensively, how their products are entering these vehicles because these vehicles need more computing power. And so those are the two trends lifting Qualcomm's revenues right now. And those trends are likely to continue, especially the automotive trend. The smartphone premiumization trend maybe has a year, 2 or 3 years. That remains to be seen. But the automotive trend, where increasing computing power is going into vehicles, that's got 5, 10, 20 years of growth potential because we're just in the very early innings of driverless car development. Management is very confident in its business, and they've indicated that with a big increase in stock repurchase authorization, $15 billion announced. So Qualcomm will be buying back their own shares. They feel like their shares are undervalued. And let me remind you, my intrinsic value calculation tends to agree with management here. The intrinsic value is 200, current market price is 170. The stock is undervalued. Management feels confidently about this prospect, and so they're buying back their shares. Looking ahead, the company's forecasting revenue of about $11 billion in the first quarter and non-GAAP earnings per share of about $2.95. But more important than the upcoming numbers is the forecast Qualcomm gives for the smartphone industry in 2025. Where do they feel the prospects are for this industry? Are they going to forecast low single-digit growth? Or if they forecast mid-single-digit growth for the for the smartphone industry, that's going to be great news for the stock. Also, we want to hear about their gains in the personal computing industry with their latest products. They've been out in the market for a few months now. I want to hear more about their progress in that category. And then, of course, the automotive segment. Will they deliver continued growth in that segment when they report quarterly earnings results? Now, in addition to the discounted cash flow valuation, if you look at the forward PE ratio, it's only at 14, which is near the lowest it's been all year long. All these signs point to Qualcomm stock being undervalued. Now, the question becomes, should you buy Qualcomm stock before earnings or after earnings? I don't see this stock as being so undervalued that you need to buy it before earnings, but I do see it as being undervalued. I typically say to buy half before earnings and half after earnings. This is one of those situations where there is undervaluation, and you can do 75% before earnings and 25% after earnings. So hypothetically, if you've got $1,000 to invest and you're trying to figure out when you should buy it before or after, usually I advise against trying to time the market. But if you're in this position, if I was in that position, I would do $750 before earnings and $250 after earnings. In other words, 75% and 25%. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.